Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
A surge in hog disease outbreaks this winter in China, the world's biggest pork producer, will slow the industry's rapid recovery since the African swine fever contagion 3 years ago, according to industry participants and analysts. China's pig herd rose 31% in 2020, according to official data, as the industry rebuilt. But more frequent outbreaks of swine fever are occurring in northeast and northern provinces, along with a worse-than-usual rise in porcine epidemic diarrhea, PED, said a manager at a pig farm supply company. The disease challenge right now is bad, said the manager, who declined to be identified because he is not allowed to talk to media.
Stocks of corn held by Chinese feed makers and other commercial grain users have jumped to multi-year highs in some areas, indicating that heavy corn users remain concerned about crop shortages even in the wake of the recent harvest. China's industrial corn users have snapped up the grain to feed a fast-recovering hog sector since 2019, propelling local corn prices 50% higher during 2020 and triggering record crop imports, including China's largest ever U.S. corn deal just last week. Many of the purchases were for immediate use, but buyers also replenished stocks in anticipation of enduring supply tightness.
Moving on to the top news in the energy sector.
Following a year of grim losses amid pandemic lockdowns that dented demand for fuel as people stuck close to home, the largest U.S. independent refiners are promoting plans to boost production of renewable fuels. Renewable fuels represent a silver lining for refiners under threat of being left behind by the shift to electric vehicles and away from fossil fuel processing. As the big refining companies in recent days reported year-end results, executives devoted plenty of time to discussing how they will create fuels that emit fewer emissions that contribute to global warming.
OPEC Plus maintained its oil output policy at a meeting on Wednesday, a sign producers are happy that their deep supply cuts are draining inventories despite an uncertain outlook for a recovery in demand as the pandemic lingers. A joint ministerial monitoring committee of OPEC Plus met virtually on Wednesday, pronouncing itself optimistic for a year of recovery in 2021. A statement issued after the meeting said, "Oil has rallied from historic lows hit last year as the pandemic hit demand, thanks to record output cuts by the Organization of the Petroleum Exporting Countries and Allies, known as OPEC Plus, that the group is beginning to unwind." Next, we have the top news in metal markets. The United States Mint said on Tuesday it was unable to meet surging demand for its gold and silver bullion coins in 2020 and through January, due partly to pandemic-driven demand and plant capacity issues. Sales of U.S. gold bullion coins rose 258% in 2020 while silver coin demand was up 28%, the U.S. Mint said Tuesday. Heavy buying has continued in 2021, it said, squeezing supplies, which had already been tight as the coronavirus affected production. A social media-driven buying spree lifted silver futures to an 8-year high on Monday, but dealers in the market for coins were already grappling with a supply shortage and shipping delays before that rally.
Dalian iron ore futures fell on Wednesday on rising shipments from the world's biggest suppliers of the steelmaking ingredient, including Brazil, and weakening demand in top steel producer China ahead of the Lunar New Year holiday. Iron ore on China's Dalian Commodity Exchange ended daytime trading 0.9% lower at 948 yuan, $146.77, a ton, down for a second straight session. Brazil's iron ore exports in January reached 29 million tons, compared with 26.7 million tons in the same month last year.
We will now look at the top news in the agricultural sector.
India's imposition of 10% duty on cotton imports is unlikely to dent buying, the head of the Cotton Association of India, Kai, told Reuters. The 10% import duty imposed by the world's biggest cotton producer was announced by Finance Minister Nirmala Sitharaman in her budget speech to Parliament on Monday. There won't be any impact on imports. The textile industry needs extra long staple cotton, said CAI's president, Atul Ganatra, adding that this type of cotton is in short supply on the domestic market. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.